following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys had a decent Wednesday night, Thursday morning here in the States. Let's take a look at the Russian ruble. Here's the deal. Got some, news coming out, or not coming out really for that matter, OPEC related. This particular currency, the reason why we're looking at it, we're going to look at the Canadian dollar, and then we're going to look at crude oil in general. I had too tight a stop on crude oil yesterday. This is our weekly view, 68.22.23 on fair high, 64.47 down below. So again, you've got a really thin profile on the ruble. You've had kind of a rundown here with the intermediate, the daily kind of traipsing down, but it looks like to me that we've got an opportunity to rally a little bit here. Why is that the case? You've had the 240s kind of cross over. You started to have some of the information on the Canadian dollar. And again, I mean, these things don't have to ratchet up or down together, but you've got crude oil looking like, not really cooperating price-wise with some of the things that are going on in these relativity trades. Here's the Canadian dollar. We've talked about this thing becoming more devalued and unfair highs, 133, 107 being the ultimate target here. And now you've got the dailies kind of getting back in the balanced area again. There's 131, 885, and then obviously that weekly unfair high a little bit higher. So again, these things looking a little tenuous that they want to become devalued again. And what does that mean? Just on a relativity scale, throwing out the technicals altogether, that, crude may have seen its highs actually for a while. And here's the situation on the weekly. This is the July contract. These are all points in the scanner. So when I go into the futures section of the scanner, I can go in there and get these inflection points just like I can on thousands and thousands of instruments. So I'm going to go into the futures section, which are already there. There's WTI crude. There's July. There's that top of the profile there that we're going to talk about. There's that weekly kind of undisturbed march forward. But again, you're sitting at an inflection point. You've got some of those relativity instruments sitting there. OPEC is set for another showdown. That was the title this morning on a couple articles that I've read during today's producer summit in Vienna, with reports of an output agreement being shot down by Iran as Saudi Arabia tries to revive coordinated action. Member countries failed to reach a consensus, blah, 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 blah. So that in itself should seemingly kind of scare crude higher, but nobody really seems to care. And the devaluation of this ruble Canadian dollar, which are very mirrored situations a lot of time based on what crude oil is doing for their economies in general. Seems like crude oil may be topping out here. And what I'm thinking is, if you can look at 49 playing defense above, I got to tell you, I literally set my stops too tight on this personally, but 50 and a half, what are the recent highs? Let me see what that is. 50.21. I don't know what I was thinking, but you've got an opportunity for this to at least come down to 46. Again, I was looking for about a 6-to-1 risk reward ratio on that trade yesterday. I think I got in like 49.06, something like that. Set my stops a little too tight, but you've got a big downdraft that could happen at least to explore the entire fair auction on the daily, just like we've done there, just like we've done there, just like we almost did there. But most of the time, these balanced areas, these inflection points are explored, and we haven't even tested the bottom of this profile. Doesn't have to happen. Doesn't have to happen. But I think you got a good opportunity here on a contra trade against the long-term trend up based on all things considered that we just spoke of. A couple other things I want to show you this morning. Very interesting. This is the 10-year. We talked about, this 130.01 being the targets on the 10-year for a while. Well, yesterday we hit, doesn't happen like this all the time, 130.01 rounded off. And that was kind of cool because if we go into the S&Ps, at the same time, we were traversing down into these unfair highs on the weekly, which we talked about yesterday was, you got this thing, if this thing spins around, it's, you got to look at support 2083 down into 2073. I think we had 2083.25 to the tick. The unfair high is 2083.20. So this doesn't happen like this all the time, but it was interesting how the 10-year had kind of got to its peak on the intermediate. At the same time, this thing was kind of finding that inflection point. These are types of trades that are happy trades. They're relatively easy trades because you have that weekly close above, you have the retest, you start nibbling at the weekly unfair high, and you put the stops in, and this is kind of cool how this worked out. Similarly for the 10-year, talked about the 10-year not exactly catching fire because of this S&P weekly close above. So that the initial targets were hit. Now we talked about if this S&P continues to move higher, there could be quite a few folks that would just give up on the 10-year. But right now that was a trading opportunity, or right then that was a trading opportunity. I've got to use the correct tense verbs, at least on the air. So that's the story there. So we covered crude, we covered the S&Ps, we looked at the notes. I think the notes are a no trade right now. That trade's over for a while. But again, the long term on the note trade, still don't see yet a reason to kind of not play defense still around this weekly unfair low on 2002. But again, those S&Ps look a lot more attractive on the long side than the short side, and that could affect this thing at some point. All right, looking at the den. Nothing. Nobody cares again in the den, and I accept that. It is what it is. All right, so let's take a look at the Nikkei. This diverted tax hike seemingly has disturbed the market here. It's actually caused the yen to inflate as far as the valuation of the yen, which was, I want to kind of walk through this here. So the yen becoming more valued, we talked about this reversal, not okay to get back in the water until we get to 110.40. A weekly close above. That hasn't happened. This reversal is kind of disturbing. Actually, it's something we're going to talk about a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Finishing up with Japanese yen. Talked about really needing to see a weekly close back above 110.40. This little reversal was disturbing to me. I was just really hoping we'd get a weekly close above that inflection point, kind of like the S&Ps. That happened. It is what it is. But, you know, I was really expecting the 110.40 weekly close above there this week, and then being able to look at that 110.40 as support to try to drive this higher. And the propeller heads over at the Bank of Japan have basically poured water on that fire. And do you ever see the guys, the kids with the beanie with the propeller on top? If anybody out there wore those when they were young or currently, I apologize for even speaking about this, but that's, you know, the kind of the brainy kid, the propeller head. That's what I'm referencing there. And how about the gold, copper, crude? They should throw milk into that commercial on TFNN. Milk is a very widely traded commodity. Actually, they do have milk futures, and that is the rival to the Maytag repairman pit. So, again, Larry still has his. Okay, good. And Larry, we're going to look at milk futures today together. And we won't have to take Sominex tonight to go to sleep. All right, so let's take a look at the. We took a look at the Nikkei, the Japanese yen. We've talked about the just awesome levels that what we talked about on the S&Ps and the 10-year and how they've kind of reached what they were supposed to do. Gold. I got to see. I'll just be honest with you. I got to see a daily profile appear down here to get something to lean on and feel like I'm trading with some form of sanity down here. I cannot go short gold. I just can't bring myself to do it. But you know, we got to have a new profile here. That's all I'm going to say about it. Short term, guys. Here's the 240s. You know, really not breaking the trail here on as soon as we broke on the dailies, you know, the 240s kind of regulate trade down. against that weekly. This is kind of a trade, in my opinion, still against the long-term trend up. But I just can't get excited about it until I see a new daily balanced area up here and lock in. That hasn't happened, which is not good. But we'll deal with it. We talked about crude a little bit and the relationship there to the Canadian dollars of the world, the rubles of the world, the OPEC fighting little whatever they do of the world. Big fan of crude going down to 46 here. Playing defense above 49 based on your appetite for risk. July contract in coffee. This was something, again, like the yen, was a little disturbing. We didn't get that weekly close above 133.63 like we wanted. We've had this divergence showing up here in our navigator. I'm talking about coffee because I think the latest statistics are that I consume 0.01% of the world's coffee supply. But we didn't get that weekly close above 133.63. That, just like we did before, again, you kind of have these weekly closes, support. Sometimes they don't work. That's what stops are for. But we've had this profile edge higher for the first time. We've got this divergence in place still. Really want to see that close above 133.63 to get excited. Or you can look at some of these areas down below, bottom of the profile, take some shots here around 117.63. But man, that was awful that didn't close above. I listen to David White's show every day, by the way, Joe from Scotland. I learn something every time I listen to David White. It's actually one of my favorite shows on the network. I'm David's secret admirer. All right. Enough of that. Here we go. Here's Apple. All right. That's the daily. Here's the weekly. All right. So Apple, obviously not for the past. This is a weekly view on Apple right now. We talked about this area 98.64. When we have these weekly closes above these weekly profiles, and then you've got the S&Ps that are looking like they want to spin around above 2083. We kind of used that as support yesterday. It's very, very scary situation for the shorts right now. But sometimes, as Larry will tell you, some of the best trades are the ones that have you crying for mommy sometimes at some point during the trade, and then somehow the clouds part and God appears. But that being said, with that little S&P kind of spinning around up there, the 10-year just not, it's a mixed bag as far as the relationship trades, but the breadth of the market as far as profiles go within the scanner on the S&P is very strong. All that being said, Apple could look at all of that. We've got the close above, we've got the retest of the 98.64. Not a stock to be shorting right now, and I'm looking at that major inflection point. We're trading 97.86 this morning, so a little bit below there. Apple may not be the one, but may not be the opportunity to short right now based on the recent action and how it's kind of cooperated with the market. So, you got better longs out there, but again, I'm not a big fan of shorting Apple right here. Last time I picked a battle on Apple to short was around this area, a little bit too much rich for my blood in that area. But again, that's the name of the game. We continue to turn the wrench the same way. We caught enough of a short action on Apple before, based on the weeklies, based on these breakdowns. Okay to be short, not okay to be long, and then getting into the short thing again below 104. And again here. So again, it's easy to say. Sometimes it's hard to do. Losses short, profits ride. Larry, should we write a book about that? So here we go. Shanghai, Nothing to write home about. U.S. market's probably going to like their market going up. Kind of disconnected from this scene now. Nothing to talk about there, really. We're going to take a look at Amazon. Okay. So this has been one where we've, talked about that close above the news, the retest. You don't want to be short this thing. We've talked about that religiously. And it's okay to be long, not okay to be short. But now what's happening here, we've got some inflection points that we've kind of paid attention to here. Again, we're going to talk about this a little bit when we come back and the relative strength of this stock relative to the sector in the market. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Oh, good to be back, guys. Here we go. Amazon. Got a brain lock there. 7:22. See, I hear the music at night in my dreams. I don't know when the show's actually, when I'm actually on the show and when I'm, in a Tom subliminal message flashback mode. So that's why that happened. 7:22, unfair highs on Amazon. On the daily. So again, these are targets if you're trying to catch bids on this thing at this stage. Remember, the weekly get above the profile. The daily regulates the trade up. It's kind of that simple sometimes. And, the reason it's easy to say on Amazon and to kind of be a Monday morning quarterback is because the relative strength of this thing has been insane. And this weekly close above the balanced area on the long term, even though it's a big, wide, mega profile, that's completely scary for shorts. At the same time, this thing has just been powering up on a relative strength situation relative to the markets. And, it's easy to say, hey, these are the targets, these are support, but it really is in a situation like this. Big Brother, Amazon is really looking strong. So here we go. Let's see what else I got here. Okay, I want to take a look at Twitter really quick. Get them out of here. That's what I think of every time I think of Twitter now. Okay, so seems like this thing is not looking good, huh? So as we look at this, people might be looking at this going, hey, wow, it just rallied from 14 to 15 and a half. All it's done, folks, if you take a look at this, and I feel for you if you're an investor in this stock and tried to double down and do the dollar cost averaging concepts that you go to the AM radio stations, not TFNN on AM radio, but some of these guys you hear on the Saturdays, and I literally turn it on. I turn it on for complete comedy because some of these guys are, don't ever sell stocks, dollar cost average. You will always win in the long run. That's not actually the case. So again, it's a little funny to me, but when you look at these things and you look at, and this is in the scanner, you look at how this thing has acted. You see that? You see that? You see this? You see that? You see that? You see this? You see that? These are the inflection points that are important, and they're important also because they have to be broken on a long term for you to get excited about getting long Twitter. All right. So you got a chance if you want to try to pick something up on sale, you can look at the bottom of these profiles. All right. And the bottom of that profile right now is 14.15. But all we've done right now is, hooray, we've rallied up to the top of the new scale down situation on Twitter. And that number is, guess what, 1543. This is all in the scanner. And all we're doing is doing a downtrend resistance move, as far as I'm concerned. And this thing looks as scary as it has ever looked, right? And considering what the market's doing right now, compound that scariness. All right, I may be wrong. They may have a news announcement that they discovered a new way to create plutonium 390, but cheaply. But right now, bad. Remember Dana Carvey, the first Bush? Bad. That's kind of what this is. Well, I don't know why I was doing Nixon right there, but all right. So as we look at this, let's take a look at General Electric because, my mother's in this stock. A lot of dividend plays, long term kind of. I don't know a lot of funds that don't have this in their portfolio. Right now, and the reason I'm pulling it up is I did get one email about it, and it kind of sparked my interest in General Electric in general. 29.86, you got a chance to play defense against here, but again, hasn't been really one of the best performing stocks relative to the market lately. It's a dividend play. That's all I'm going to say on this. But again, not the darling of the long world right now. Man, did Dana Carvey do the best first Bush impression? That was just that. I used to watch Saturday Night Live for that alone back then. Incredible impersonation. God, he did some good ones. All right, let's take a look at Alibaba really quick. All right. So long term, and here we go. So again, if you're looking at Alibaba for some type of trading opportunity, the only thing I can really say here is 75.08, 80.66, kind of in the middle of a fair auction, not exactly cooperating with the market right now. Put a gun to my head. I'd rather be short this thing looking at it purely technically, but considering what the market's doing, the S&Ps that is, and where the broad understandment of the internals are, I mean, this thing actually ratcheted up more yesterday than it was the day before, or actually 2 days before, and it will. Well, I'll show you this. Let me just stop talking about it. So, again, this is showing some pre-market activity, but it's interesting how this thing continues to scale up, and these stocks seemingly are getting spring-loaded here, right on the top of that weekly profile. This could all change, of course, but you know, the market's going to do what the market's going to do. We're just trying to give you some probability plays here. So this is, let's see if I can do this. This is our 60-minute. We're not looking too bad this morning. This is our daily. Not yet getting too overextended here. That's not really overextended. And the weekly, again, you know, this is what you want to see when you're getting near the highs. You want to see the internals in concert with what's going on with the index plays itself. And you can come in here and look at these index inflection points. Here we are, spinning above. Make sure you put your stops in, folks. 73 and 83 is a big, big collection area for this right now. All right, let's take a look at the ETFs really quick. Wow, they're all green. Interesting. Oh, different time frame, all green. Energy stocks, we're going to take a look at these. Crude's been kind of hanging around up top here. I'm thinking we're going to have a pullback to 46. So, you know, what might be an opportunity here? Let's look at NOV. There's the daily, there's the weekly. So I'm kind of in love with this one on the short side. Here's the weekly unfair highs, 33.6, 33.60, excuse me. Is that, wait. Yeah, 30. Why does that say? Yeah, 33.60, excuse me. And you got some targets down below 27 on this one. Not the darling of the oil world. And I think if oil pulls back, this one's going to just completely come unglued. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We're looking at the XLE. We're talking about NOV, stock that's just been showing itself as crude's been climbing. Crude pulls back. This thing's probably going to, the chances of it rallying if crude pulling back is very low. Crude rally, it might sit still. So you got kind of that 10-year-ish, market goes up, 10-year goes sideways, market goes down, 10-year rallies. So that type of setup here, which I love. I love when I'm wrong on the driving component for a trade. I love it when I'm wrong and not exactly being able to lose money. I don't enjoy losing money. I don't know if we've talked about that, but let's take a look at APC. This is the type of one, this is kind of launching paddish right here. You want to stay away from these little puppies. They've got some inflection points here. Those are the types of things that can pull back a lot of crude pulls back. But again, you're trying to put the probabilities in your favor and keep the trade boring. The excitement obviously is in some of these ones that have been kind of ramping up here without question. Let's take a look at our favorite little dude here, SWN. Oh, wow. Imagine that going up. Tucker, I hope you're watching. So we had the big profile up here below price action a while back. We all know that is bullish if you watch this show enough. Now this little thing is trading 14. I think we really started looking at this from blocking out the short side. Remember, only going for long opportunities on SWN from a trading opportunity. I think we were around 6, maybe 5 and some change. So this thing's ramped up almost 200%. And we called it TFNN, the mothership. So anyway, it's just been one of the ones we've been monitoring. We're just playing probabilities, folks. This is, we're not going to do a Zach's investment letter. Do you guys ever look at their? I hate to bash. Who do you hate in the trading industry, Mr. Logan? Zach's is not exactly. It is the flip-floppiest little thing I've ever read in my life. Zach's, not Goldman Sachs. Well, Goldman Sachs, we've talked about that one. But that newsletter, it's incredibly Monday morning quarterback-ish, and in my opinion, gives some bad advice. I'm probably going to get sued over this one, but it's not anything I think has a lot of value. I'll go ahead and say that. So anyway, I don't know how we got to that area, but ExxonMobil. Let's take a look at this one. Again, you're looking for one to short. This is not. It's not exact. You could look at this last couple of weeks. Crude oil's gone higher. ExxonMobil's not cooperating. This is obviously a major player in this particular ETF. Do we deserve to pull back here? Possibly. I think we've kind of already started that process. Maximum pullback on this will be about another 3 points lower, 84.66 if crude comes apart. But we don't know that, and you've probably got better shorting opportunities in the XLE sector if you're looking for something like that. All right, so let's take a look at another one here. Valero, VLO. So, and I'm showing the scanner charts. E-Signal will probably be showing a lot better. So Valero, again, you know, you got a weak stock here. You got something sitting on the previous lows. See this little area right here? Scary little situation if crude pulls back. We've rallied up into, thank goodness, 55.71. So you've got something to play defense against. Again, if you're looking for crude to come back, which I am, these might be ones that might be an easier trade. Okay. A couple other stocks I wanted to look at here. Yeah. We got to look at this one. Cores. All right. So what's the drill in this one? Beat expectations. All right. So the good news is don't understand these guys are you ever bought any Michael Kors products that they slap their name on? They don't manufacture anything. But 45.55, all we've done is kind of stick our nose back up into this weekly unfair low. I love this thing as a short. 45.58 stops above. Where's your targets? 41. I think you got a nice little trade on your hands. So we're sitting about 45.92 pre-market. It looks like that. And again, within that noise area of the unfair lows, could move higher. I like this stock as a short. And let me pull up my other list here. Okay, going into the scanner. And again, you know, you can find a lot of different things in this scanner. You can use a lot of different ways in a lot of different time frames. One of the ways I never really talk about too much is, you know, what was actually looking ugly on the close. So these are stocks that ultimately started trading below 240s and 60s together, not closing that well yesterday, and maybe this morning starting to show some weakness here on the short-term time frames. Coca-Cola Enterprises, man, that's an ugly scene. And let's just look here. All righty. Let's look at ISRG. Why am I looking at this? Because we've got a 1 and a 1, and it's been kind of in an uptrend. So let's take a look at this. All right. Weekly, daily, got better shorts out there than this one. This is the 1 hour. This is the 240. Yeah, this is not that good of a pick. Let's take a look at CCE, actually, just because the scanner says it's a piece of crap. All right. Ooh, yeah, story. Ouch. Okay. Nothing to play defense against. Nothing. Yeah. No trade. That's a no trade, too. Scanner will find many no trades. All right. So let's. That was just something I was trying to show you. A way to get some ideas. The real way you want to use that particular sort is if the market's going straight up, and we're up like 200 points in the Dow that day. You want to try to find things that are just not wanting to get out of their own way, and also you can use a sort like this. Breakdown. Ouch. This is an intermediate to long-term breakdown situation. Under Armour. Let's take a look at this little. Ooh. Yeah, that's kind of okay. So here's AES. All right, so yeah, not a lot of bang for your buck there. Let's take a look at this one. We looked at National. Well, wow, that was already on there. Equity Residential. Okay, so this is kind of a cool one because it's got 1-1 there. And again, we're looking for breakdowns, and this one coincides with the weekly breakdown again. So again, a stock to stay away from on the long side at bare minimum. We're going to look at some other sorts when we come back, folks. We're going to look at some downtrend resistant stocks that are popping their head up in the midst of this S&P rally, but possible good shorts. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, we're looking at H&R Block right now, and man, this is one. It's been ugly as I don't know what. 2986 talked about their business model a little bit. Now it will be ultra cool to do this. Got a stock that's just kind of rallied up, got the top of the profile. 2158 could try something here, or you could wait. And if it doesn't happen, it doesn't happen. 2306, a little bit higher. Something's wrong here, and giving you a gift of rallying up with the market lately. This is downtrend resistance. Just looking at some stocks that are congregating around inflection points. Let's look at let's look at ESRX. Let's see what the drill is here. Yeah, it might be an opportunity here. 76.71, just kind of rallying up with the market. It's kind of done its thing for a retracement, in my opinion. We're going to take a look at HRS. This is a setup that I normally like. Stock that's just kind of not participating that well. Finally got back up, almost up into 79.85 yesterday. Microsoft, wow. It's on the list. Okay. So this, the market, the broad market spinning around up here where it is a little concerning right now to short stocks. But if you're going to try to short stocks, you're looking at some things where hopefully they won't be as painful if the market just completely does a moonshot here, which it might do. So, again, we're trying to find relative weakness type plays. They're right here, right now. Caterpillar. Let's take a look at this one. Again, you can see where the inflection points are there to play defense against, which is what we always look at first. Okay, so let's take a look at breakouts. Things that happened yesterday, intermediate, long term, this week, yesterday, ADS Alliance Systems. This one, I've been in a downtrend, could have a weekly close above this 218.30. Wow, 218.36. So that will be a decent place to play defense. This one could run pretty hard. It's kind of cleared some congestion here. Let's look at Colgate-Palmolive. And there's the daily. There's the weekly. Got better plays than that, in my opinion. Let's look at Hanes Brands. Okay. This is one, we're talking about from the short side a while back. Right now, that's something that you should be looking at on a stop basis at this stage. Let's take a look at the XLU really quick. And again, you can do these custom sorts. I'm going to go in here and do this. Stocks that are trading below that are sitting at the top right now. These are the ones. There's the H&R Block trade. There's Harris Corp, Mylan, Urban Outfitters. Let's take a look at this one. I like this one. Let's see where we're at pre-market on this one. Got anything? Mylan. Let's take a look at this one. This might be a gift here. Okay, so going back to the XLU, let's take a look at the chart here first. There's the weekly. So, the 10-year showing some type of supportive action here at this stage, boding well for the utility stocks. You can find some gems in that particular sector in the scanner. Guys, you've been great. Stay tuned for Larry and all the hosts on TFNN all day. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.